Edwards with International Tax Advisors, Inc. with another episode of Tax Briefs. So previously we discussed two layers of taxation, one tax at the corporate level, another level at the individual level. We talked about one way to solve those two layers of taxation is by entity choice, because certain entities are not subject to a separate level of taxation. Now let's talk about how do you choose your entity, or in some instances, why it cannot be chosen. Typically, the type of entity, unless it's a corporation, so if you set up a corporation, meaning an entity with a suffix such as Inc., this entity will then in perpetuity be considered a corporation, and it generally under tax law could not be considered anything other than a corporation. So we refer to those types of entities, the Incs, as per se corporations, because that's what they are on their face. Other entities such as LLCs, which are not corporations on their face, they have the ability to be considered in one of two separate ways. It's either a partnership or a disregarded entity. And disregarded essentially refers to an entity that is not recognized for tax purposes. So the rule with an LLC is any LLC with two or more members, so two U.S. individuals, that's going to default to a partnership. So if you make no choices, no elections, and you have not set up an Inc., and rather you've started with an LLC, and you have two partners, two or more, you'll be automatically considered a partnership. Likewise, if you set up an LLC and you only have one member, it's going to default to a disregarded entity. Now, the important thing here to note is that you do not make this decision. If you have two partners, you're a partnership. If you have two members, you're a partnership. If you have one member in an LLC, you're a disregarded entity, and you need to file your tax returns as such. Now, there is an ability to choose an election should you not want one of these default classifications. Let's say you have two members, yet you don't want the flow-through treatment of a partnership. You do not want these, for some particular reason, these items of income and expenses rolling up. Maybe you want to create some sort of deferral. You could then elect for this LLC to be treated as a corporation just for tax purposes. So this does not change the entity's designation with the state. It's still an LLC, but again, just for tax purposes, this entity would now be subject to corporate level taxation, and we would recreate the two layers of tax. So it's important to know that certain non-corporate entities have a default status that is determined by how many members they have. So two or more members, typically a partnership, one member disregarded. And those same entities that are not corporations have the ability to elect. And you can typically elect entity status on Form 8832.